back and forth, and looks like it'll break out any time now. Watch, and I'll show you what I mean. Hi, this is Tim from TradingStrategyGuides.com. Today's trade pick is a trading range on silver. We'll take a look at that, but first we've got a few active trades, including another setup that could trigger. And later on, Tim's Trading Maxim. It's Monday and the last day of August. Finally, hopefully we'll get away from this heat wave in Texas. Let's blast into this week. Remember to click the subscribe button and hit the bell so you won't miss any of these great trade setups. Let's take a look at the active trades. Friday, Palladium finally closed above the triangle that I've drawn here. I moved my stop up to the current parabolic SAR, which is 20.9607, to lock in 103.07 on this bad boy. And here's Amazon, and it hit first target on Wednesday. Now we're just waiting for the PSAR to catch up, and then we'll start trailing the stops on this. Planet Fitness looks like it's headed to the moon here, guys. Waiting for the PSAR to catch up here to start trailing stops on this one. I bought the Aussie yen just ahead of the close on Thursday at 77.36-ish. Stop loss is 76.45. First target of 77.97. Then Friday it pulled up here to within 1 pip of the target and then pulled back. That is so frustrating. I would have closed it up there if I'd been around, but I wasn't, so hopefully this will continue on Monday. Lastly, just a heads up on Coca-Cola. It is attacking the top of the range right up here, and that's a very bullish close right near the top of the candle. So watch it for a buy signal this week. And that's it for today's active trades. Let's take a look at the trade pick. Well, silver is in kind of a small range here for the last few weeks. Whenever I'm unsure about these patterns, I look at the volume and volatility, and you can see that it made definite declines on both of those. So if they're consistently declining like that, it makes me way more comfortable with the consolidation. Just to be sure everyone understands, a trading range is a consolidation with a strong support level like this one at 26 and a strong resistance level like this one up at 28. Price just sort of bangs back and forth between these levels until it eventually explodes out of the range in one direction or the other. I'll take a break of a trading range in either direction. And as a nice confirmation, as I mentioned, we have a decline in the volume and the volatility right down here. Volatility is the amount of daily movement of the price, and I measure it with the average true range, or ATR, which shows the average length of the last 14 candles. And here's the trade plan. We're going to buy a daily candle close above the range or above 28, or we will sell a daily candle close below the range or below 26. On the breaking candle, to enter a full-size position, we want to see this volume bar reach up to this volume average right here. If it doesn't quite reach the average but does reach at least 75% of the average, I'll open a half-size position to reduce risk. You can calculate the percentage by dividing this volume number by this volume average, and you should get at least 0.75. If you don't get 0.75, I suggest you stand aside on the trade. Stop loss is 1.5 times the ATR. First target is 1 times the ATR. So let's say this breaks to the upside, and on the day that it breaks, just ahead of the close, say 15 minutes or so, you put in your buy order. Then you look down here at the ATR, multiply that by 1.5, measure that distance below the entry, and that'll be your stop loss. Measure 1 ATR above the entry, and that'll be your first target. And of course, just the opposite if we're going to the downside. If after entering the trade, we get a close back inside the range, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of the pattern should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Typically, I do this using two positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that we'll be allowed to run. When the first target is hit, we'll have to manually move our stop loss to break even on the second position. I will only risk about 2% of my account on each trade. And that's today's setup on silver. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your own mind, that's my intent for the trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, Tim's trading maxim number 61. Long-term consistency trumps short-term intensity. And this is a quote from Bruce Lee. The great Bruce Lee had the truth of it. I've always been able to focus on a project and give it great intensity for a short while, but I would frequently slack off. It wasn't until I learned discipline and consistency were the important factors in success that I progressed. I can't stress it enough. Practice discipline and consistency. They are the most important factors in your success. Remember our silver trade plan for today. We're going to buy a daily candle close above the range or above 28, or sell a daily candle close below the range or below 26. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your target is 1 times the ATR. And remember to click the link below to the trade management video for more details. Don't forget to sign up for my free Trading Picks email list to be sure you don't miss any of these great picks. I post 2 or 3 trading picks a week from all different markets, and you'll get to see them first. Best thing is, they're free. I'll put the link below the video. Also, don't miss my new segment, Dream Trades, on Wednesdays. I'll be showing you one of my Dream Trade stock setups each week. I'll try my best to time them so you'll be able to get in on them as well. Check out the link below to find out more about the Dream Trade services at Trading Strategy Guides. Be sure to come back to Trading Strategy Guides YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video or both. And remember, the only stupid question is the unasked one. Also, don't miss the next installment of the Trading Education series on Wednesday when we'll continue to look at MT4's menu system. As always, thanks for watching, thanks for subscribing. Don't forget to hit the thumbs up below. Have a great week, and I'll see you on Wednesday.